We'll go through with a glance so that easily you can write all the 1 marks. What is meant by preference share? With the question itself you can understand preference share is where the shareholder is given preference, okay, and the payment of dividend also is done before paying to the equity shareholders, okay, and while they'll be repaying the capital also, on that time they will give off first to the preference shareholders and then only they'll go for the equity shareholders, okay. So that is why it is called as preference share, because a preference is given to those shareholders. What do you mean by redemption? Redemption means a repayment of shares, okay. When we repay the shares, the amount to those shareholder, it is called as repayment of share. So that is called as redeemable preference share, where the shares can be repaid and the shares can be taken back, okay. Amount can be repaid and the shares can be taken back is a redemption of preference share. So there are various types of preference share and it is very important question. Even it can be asked for your 5 marks as well, or even can be asked for your 15 marks as well. So you should know how to write the stuffing of all of these as well. Redeemable, which can be get back; irredeemable, which cannot be repaid and which cannot be get back, okay. Participating preference shares which can participate in debenture or equity, they are they will be participating in the bonus share, they will not be participating in the bonus share. Cumulative, for example, this year the company is not able to pay the dividend, so it will get added to the next year, so that is cumulative preference share. Non-cumulative preference share is by chance if the company is not able to pay the dividend, it will get lapsed and it will not get transferred to the preceding year. So these all are the various types of preference share. What are redeemable? You know that when we repay, that is redeemable when we are not able to repay, which we cannot pay back, so that is irredeemable. Participating, which can participate in the surplus of the company during the liquidation, which cannot participate on the surplus of the company, that is non-participating. Cumulative, by chance the dividend can be added to the next year if they are not able to pay, the company is not able to pay this year, okay. This is the journal entry which we need to write when you are transferring the divisible profit to the capital redemption. So that profit which you are dividing will be debited, and where it is being transferred, where the money is getting credited, to the capital redemption reserve. Non-cumulative, where it will get lapsed and the dividend unpaid in a year will not be paid and will not be carried forward. So what kind of entry you're going to write for the divisible profit to capital redemption reserve? Again, okay, transfer of divisible, the same entry you're going to write down. Concerned divisible profit account data to capital redemption account. It can be profit and loss, it can be general reserve, it can be anything, okay. What is the entry for providing premium payable on redemption of preference share? So securities premium or divisible profit account data to premium on redemption of preference share account. So securities, see students, what is the entry for providing premium payable on redemption of preference share? So premium is being paid on the redemption of preference share. So we'll take this premium money from the account which is called as security premium. If by chance according to section 55 it is there written that we should not take the money from the securities premium, then we should take from the divisible profit account like general reserve, profit and loss account likewise. If it is allowing to take the money from the securities premium account, then we can take it from the securities premium account. So money we are going to take from securities premium account or from divisible profit account in order to pay the premium on redemption to the preference share account. What is capital redemption reserve? Capital redemption reserve is a reserve which is being created by transferring a sum equal to the nominal value. See, the face value of our capital should remain same even after when we redeem the shares. Okay, so that we have to make it equal. We have to take the help of divisible profit or any other fresh issue of share in order to keep our face value same. So that is why we take the money we transfer the money from various other accounts like divisible profit or through fresh issue in order to redeem the share. So that is why we'll transfer this money and this money to the capital redemption account in order to redeem the preference share or any other share. Distinguish between premium on issue of share and premium on redemption of share. What is mean by premium on issue of share? Premium on redemption of share. So you can easily understand, while you are issuing the share on premium, it means you are going to get some money extra. And when you are going to redeem the same share on premium, it means the shareholders are going to get the money extra. Okay. So that is the difference. Here the company will be receiving certain extra amount of money in the form of premium, and on the redemption the shareholders will be receiving certain extra amount of money in the name of premium. Okay, here we have certain section B 5-mark question. I think this is very important because you should know certain regulations and rules while you are redeeming the preference share. So what are the legal provision which are relating to the redemption of redeemable preference share, which is, first, the preference share should be fully paid. If they have not paid final call or something, then we cannot redeem such kind of shares. It should be fully paid. And after that, we should have to redeem means we have to repay the shares out of fresh issue or out of divisible profit. Okay, and our capital and our face value should not be reduced. It should be same. Okay, the preference share are redeemed. That is what it is here. So that is why we are using CRR, which is capital redemption reserve, in order to repay, which we can use it from our bonus share. Okay, to equity shareholder. This CRR is utilized only to issue bonus share to the equity shareholder. Preference share can be redeemed either at par or premium, but not at discount. If they are redeemed at premium, the premium on redemption of share must be provided out of securities premium or out of divisible profit. What are the legal requirements which we need to fulfill is that it should be fully paid, it should be accumulated profit, and it means we should have to use it from our reserves or through fresh issue of share. And if the premium payable on redemption must be provided out of share premium. Okay, and only to pay securities premium we can take it from securities premium, and other capital we cannot take it from securities premium, we have to take it from divisible profit. This is what the section 55 says us. Okay, when the shares are redeemed out of profit, then the amount equal to face value of the share so redeemed must be transferred to reserve account called capital redemption reserve account. So when you are redeeming, okay, and from the profit and loss reserves, from reserves you are taking the money, means that money has been transferred to the capital redemption reserve first, and then from there you have to redeem the shares. The capital redemption reserve account to be utilized only for the issue of fully paid bonus share to the shareholders. So these are all the legal requirement. Hello students, let's go through with the problem. This one is, a company has to redeem 1 lakh worth of preference share at a premium of 10%. It means the company is going to get back the shares of 1 lakh worth. Okay, and that too he has to redeem with 10% of premium. It means the company has to repay 1 lakh plus 10,000 extra, which is overall 1,10,000 of premium to the shareholders. Okay, those who are holding the preference shares. So this is the time to repay their money and to redeem, to get back those shares. So this premium we are going to take from the divisible profit and security premium account available in the balance sheet, which is of 20,000 and 1,000 respectively. See, divisible profit is 20,000 and securities premium it's 1,000. The thing here is that securities premium we should not use. We should only use the free reserve, which is 20,000. And now we need to find out our sufficient balance so that we can repay the number of equity shares of 10 each to be issued at a premium of 5% in order to redeem. It means by seeing our reserves, how many of the fresh shares we need to issue in order to redeem this preference share. Okay. First, you need to understand the questions very carefully. Why? Because as per the rules, the thing is that our capital should be same. There should not be any changes in the capital. So how we can redeem the share? We can redeem the share in order with the help of fresh issue, or with the help of free reserves like profit and loss reserves, general reserves, divisible profits likewise. So here the question is, we need to find out sufficient number of fresh equity shares which we need to issue in order to repay the preference shares, in order to redeem the preference shares. So number of amount which we need. Okay students, first of all, we have gone through with the question how much of the shares we need to redeem. We need to redeem 1 lakh rupees plus 10% of securities premium, which is 10 of 1 lakh is 10,000. So this much we need to repay. Now we are checking how much of balance do we have so that we can repay this money. Means we have free reserve which is 20,000 plus security premium which is 1,000, and we are going to have we have to issue, find out the sufficient equity which we need to issue with 5% of premium. Okay, and so that is, this is 1 lakh of equity share which we need to redeem. This is 10% of security premium while redeeming. So 10% of 1 lakh is 10,000. Okay, and is equals to, this is the preference shares which we need to redeem. And how much of money do we have from our reserve, which is 20,000 plus 1,000 we have. Now we have to find out sufficient equity shares which we don't know, and that too with the premium of 5 by 100 into is our X. Okay, into is our X. This is nothing but our rate of premium after when we take this shares, and when we take this 5% of this share, then we'll get a securities premium. So we don't know how many equity shares we are going to issue and what will be our securities premium. Only we know the percentage of the securities premium. Okay, based on to this, 1,10,000 is equals to 21,000 plus X plus 5 by 100, 0.05 into X. By this what happens, if we do into X, it becomes 1.05. Okay, this X is equals to 1,10,000 minus 21 minus 21,000. Okay, now X will keep it as it is, 89,000 divided by 1.05. By this we get how many shares? 84,762. What is the rate of equity which we are going to issue? That is 10. Face value is 10. So 8,476 is the shares we need to issue in order to redeem this 1,10,000 plus X. Okay, again we'll write 1,10,000 minus 21,000 plus X plus, if we do plus, what will happen? 1.05. Okay, if we minus this, we get 89,000. Okay, this X will come here and we'll divide this with 1.05. By this, what happens? We get X is equals to 84,762. So this is our X. So X, how many X we need to get with the shares, number of equity shares which we need to, our amount of our face value. Okay, divided by 10 is equal to how many of the shares we need to issue? We need to issue 8,476 shares we need to issue in order to repay this preference share. I hope you are clear. So see students, only you need to understand the question. Okay, here the question it is, the question that the company has to redeem 1 lakh. So we have to redeem 1 lakh, and that too we have to redeem with the 10%. So this 10% we can pay it out of security premium or out of divisible profit. So our divisible profit is 20,000 and security premium is 1,000. From this help we can pay this amount. But the thing is that our capital should remain same even after redeeming the share. So how we need to issue certain fresh shares. Okay, how much of equity shares we need to issue in order to redeem these shares? Okay, we need to issue equity shares, and that too with a premium of 5%, so that we can redeem the preference share. So the formula what we are going to see, this is what we need to give the money to the preference shareholder. And how much of money do we have in our account is 21,000. We have divisible profit and security premium. This is our equity share which we need to freshly issue. So we need to find out how much of equity share we need to issue, and that too with the premium of 5%. So after 5% divided by 100, this will be our securities premium. Okay, we don't know this rate also, we don't know this rate also. That is why we are writing X and X as it is. So 20 plus 1,000, 21,000 plus X as it is. 5 divided by 100 will become 0.05 into X will become into 1, sorry, 1 by into 1 is equal to 1.05 it will become. Now 1,10,000 minus 21,000 becomes 89,000. 89,000 divided by 1.05, we get the equity shares we need to get is 84,762 of amount we need to get. So in order to repay this debt, okay, along with the premium. So 84,762 divided by equity face value is the, which is 10 rupee. Okay, equity is the 10 divided by 10 means how many numbers of equity shares we need to issue in order to redeem the preference share, means 8,476 equity shares we need to issue in order to redeem the preference share. Very easy here. It is that we are doing the reconstruction of a company, and here the following terms is being agreed. So the real present shareholders are 5,000 equity shares of 50 each. Okay, the shareholder are going to receive the following. It means we are reconstructing the company. Our current shareholding is 5,000 equity shares of 50 each. In this, now the shareholders are going to receive what gonna happen that equity shares are going to have 2/5 of the present holding. It means from this 5,000 into 50 each, from this they are going to hold 2/5 of their present holding, and preference shares will be holding 1/5 from this present holding, and from the same thing they are going to issue certain debenture. Okay, we need to make the capital reduction account. Okay, so old share equity share is 5,000 into 50 rupees means 25 lakh. Okay, 25 lakh. 5,000 into 50 each is the 25 lakh. In this they are going to give it to the, this is the old capital which are going to be in the new form. One is in the equity, second in the preference, third in the debenture, and this all has to be moved to the capital reduction account. Okay, so from out of 25 lakh, one equity, how much it is? That one equity, it will be 2/5 of the share. Okay, 2/5 of the present holding will be moved to equity shareholder. When we take 2 lakh, 25 lakh into 2 by 5, we get 10,000. Okay, and to preference shareholder, which is 1 lakh of 1/5 share, is 2 lakh. Debenture 60, and this has to be transferred to the balance. You can see 27 minus 10,60,000, then what will be the difference? The difference money will be going to the capital reduction account. See students, equity share, which is 5,000 into 50 is our 25 lakh. This 25 lakh is going to be reconstructed into new equity, which will hold 2/5 of this share, and preference shares, which will hold 1/5 of this value, and debenture 60, and capital rest will be transferred to the capital redemption. Okay, so first you need to understand the questions very carefully, because fully paid up here, this is the old share, which is 5,000 into 50. Okay, and now this going to get changed, because equity share will have 2/5 of this value, and preference share will have 1/5 of the new equity share. Okay, from this value we are going to take 1/5 of share, and 60,000 as debenture. So old value is 25 lakh, new is 25 lakh into 2 by 5 is 10 lakh. This should come here, not here. Okay, preference share, which is 1/5 from this value, which is 10,000. 10,000 into 1 by 5 is 2 lakh. Debenture is 60,000. So when you take the difference between 25 lakh minus 12 lakh 60,000, the rest 12 lakh 40,000 will be transferred to CRR. So CRR, it means it has been taken from capital to capital reduction from the equity share. Okay, where this has come from equity share. By equity share 12 lakh 40,000, this will be moved to the capital reserve 12 lakh 40,000. So here the question in this is the due entry. Okay, that 1,10,000 we have to give. 1 lakh is the preference share, 10 is the premium, and we have to pay this to the preference shareholder. After this we are adjusting for the premium. Premium is that we need to pay 10,000. How we are going to pay 10,000? 3,000 we are going to pay from security premium, and 7,000 we are going to take it from profit and loss account. If we take 7,000 from profit and loss account, balance is 20,000. By this we have arranged for the security premium. Now done. Now we are going to arrange for the capital, which is 1 lakh. So if we take general reserve, which is 17,000, and profit and loss account balance 20,000, we are not taking capital reserve here, which is 10,000. Don't take capital reserve. Okay, only we are taking the free reserves. Okay, divisible profits, only we are taking those things. So 20 plus 17, we have taken 37,000. Here they have to give 7,000 shares has been issued. It has been not written in the question. Okay, 7,000 into 10 is the 70,000. In that we are going to give 10% of discount. It means we are going to give 70,000 of 7,000 of shares for ₹9 we are issuing, which is 63,000, and 1 rupees is discount, which is 7,000. So 63,000 plus 7,000, 70,000. By this we are going to repay the preference share to the shareholder, which is preference shareholder account to bank account. So bank money will get reduced and it will get credited to the shareholder account. See students, here we have the question. A company has 4,000 redeemable preference share of 100 each. Okay, so it's 4 lakh, and now the company is deciding to repay the share with the premium of 5%. Okay, so that the company is issuing more 1,000 equity shares of 100 with the premium of 10% and 1,000 debenture at the rate of 100. So okay, first we'll write down the due entry. Now easily you can understand, the company has 4,000 redeemable preference share and it's going to redeem with 5% premium. So in order to redeem, the company has issued certain fresh shares. One is equity, which is 1,000 of 100, and 1,000 of 100, which is a debenture. First we'll write down the due entry. What is the due entry? So this is our due entry. What is the due? That 4 lakh 4,000 into 100 with premium of 10%. Okay, so 4,000 into 100 is 4 lakh. 4 lakh into 10% is 40,000. So the due is going to be 4,40,000. So this is the shares. You need to write the shares due to be redeemed. Okay, 4,40,000. Now we'll enter this issue entry. You will get bank account because you are receiving the money, and along with the premium account. Okay, bank account you are receiving due to equity share and due to securities premium. Okay, so this is 1 lakh. 1,000 into 100 is that how much you are going to receive? 1 lakh. And 1 lakh into 10% is 10,000. So overall you are going to receive 1,10,000. Being received. Amount received. You can write anything. Likewise, similar to this. After this, we'll write the entry for debenture. That also bank account. Data to debenture account, which is also 1 lakh. Being issue of debenture. And after this, we are going to make our money. We are going to adjust for 40,000 for premium first. Sorry students, I made a mistake here. Premium is not 10% while redeeming, it is 5%. So it will be 20,000. Okay. So this premium we have to adjust. How we will adjust the premium? First of all, we'll see how we are going to adjust the premium. Okay. So we have to adjust the premium. Whether is given any kind of a general reserve or anything. We need to check. As the company has sufficient profit. Okay, it means the company has sufficient profit for the to redeem the share. So we are going to take it from the profit and loss account. Profit and loss account to capital redemption reserve. Now what we are going to do, we are going to pay the money. Okay, bank account, data to preference shareholder account. So 4,20,000, 4,20,000 being cash payment made to PSH. That's it. So this is the due entry. This is the issue of equity share entry with premium. This is the issue of debenture entry. And this is the adjusting entry of the security premium. This is adjusting entry of the capital redemption reserve. Because in the question it has given that we have sufficient balance. So that is the reason we are taking it from the profit and loss account. As 1 lakh we have it from the shares, so 1 lakh we are removing, and the rest of the 3 lakh we are taking it from profit and loss account. That money we are paying to the preference shareholder. So this is the another same type of a question. So without wasting much time, we'll just go through with a glance so that easily we can go for some other important 15 marks questions. The following is the balance sheet of a limited company. We are given here redeemable preference share of 100 each, which is of 1 lakh. Okay. And equity share is there, sundry creditor, profit and loss account. Here you can see the free reserve, 1,20,000. Sundry asset and cash at bank. Now the company resolved to redeem its preference share capital at a premium of 2% out of profit past necessary journal entries. Here, from here we are going to take the 2%. Okay. So here how much? 1 lakh into 2% is 2,000. So from where we are going to give this? Profit and loss account, 2,000 to premium on redemption. So we have taken the premium money. Now we are going to take the money to redeem this. Okay. So that we are going to take again from the profit and loss account. So already we have 2,000 we have taken from here. Now again 1 lakh we are going to take. So as we have sufficient balance, so profit and loss account data to CRR. Okay. After this, we are going to make the final payment entry, which is this is due entry. How much we are going to pay? Redeemable preference shares 1 lakh, premiums 2 lakh. Overall, how much we need to pay? 1 lakh 2,000. So that we are going to pay bank account data 1 lakh 2,000 to redeemable preference shareholder account data to 1 lakh 2,000 and bank account 1 lakh 2,000. Why? Because here the money is going out. So bank will come on the credit side. If company receives the money, then the bank will come on the debit side. Similarly, here also we have the same kind of a question. The summarized balance sheet of Ashok company was as follow. Here we have share capital, in that 4 lakh of equity and preference share of 75,000. Okay, and in here you can see the profit and loss account of 1 lakh 30,000. The thing is here that final call on preference share was made on 1st of February 2005 and the entire amount was received by 15. It means we need to give this entry also in our journal entry. So final account data to final call account data to preference share capital account, which is 25,000. Okay. Yes, 25,000. By how we know it is 25,000? Because 75 was called up. 75 was called up. 100 each. It means the final call was of 25. 25,000 we've received. Okay, we called. We invited the people to come and pay the final call. And we got the full money by February 15. So that entry will give us bank account data to final call account. After this, we have to give the entry that the preference share was redeemed on 1/4/2005. So 1 April we have redeemed. Preference share capital account data to preference shareholder account. That is how much it is? 1 lakh. Because here on that time we didn't pay the final call. After the final call we will have the thing that is 1 lakh. Now what we are going to do? We are going to redeem this. We are going to redeem it out of from our profit and loss account reserve. So profit and loss account reserve account data to capital CRR, which is 1 lakh. Now finally we are going to pay this to the shareholder. Preference shareholder account data to bank account. That is it. The thing is that you should know the story clearly so that you can pass on the journal entries. Here this question is also very interesting and very important one. A company has 10,000 redeemable preference share of 100 each. These shares were due to redemption at a premium of 10%. So company issued 2,500 equity share of rupees 100 at a premium of 7.5. The company had a balance of 50,000 security premium account and 9,75,000 in profit and loss account. We need to pass journal entry. We'll write down the due entry. This is our due entry. Like redeemable share which is of 10 lakh and premium which we need to pay 1 lakh. Overall how much of money should be gone to the preference shareholder is 11 lakh. So this is our due entry. Now how we are going to adjust the premium entry? sorry, we have already issued a new share. So this is the new share entry that we have issued 2500 into, okay, here we can, as you can see, 2500 into 17, okay, 100 and at a premium of 7.5. okay, so including premium of 7.5. so 2,50,000 is our equity share, and 7.5% of 2,500, that is 2,50,000, is 18,750, which is our security premium. Overall we have got the new issue of share, which is 2,68,750. now we are going to take and as you can see, we have 7,50,000 from the profit and loss account. In the question itself we saw, so we are going to take that from capital and profit and loss account reserve to our CRR reserve. After this, we are going to make the adjustment for the security premium. As you can see, security premium, we have got it 18,750. okay, and here also it is being 1 lakh, 1 out of 1 lakh. Here see, 50,000 we have in the security premium, plus 18,750. overall we have 68,750. rest we are going to take it from profit and loss account, which is 31,250. okay, so overall 1 lakh is being, we are easily able to pay off from the securities premium and profit and loss account, which is 1 lakh we have arranged. Now the rest we have taken already 2,50,000. okay, 2,50,000. So 7,50,000 is there in the 9,75,000. 9,75,000 is there. In this we are going to take off for the final pay. For the final pay, which is redeemable preference shareholder account, 11 lakh to bank account. As students, you can see 9,75,000 we have from the profit and loss account. In this 11 lakh we have to pay. okay, in this 50,000 we have adjusted from securities premium, and 18,750 we have adjusted from the share premium of the new issue of share. So overall 68,000 we have adjusted. okay, overall 68,750 we have adjusted, and one rest we are taking it from the profit and loss account, which is how much? 31,250. okay, 31,250 we are going to take it. So here 2,50,000 if we remove, we are going to take 7,50,000. okay, here already we need minus 31,250. In this again we are going to take 7,50,000. so we are having a sufficient of money to repay. okay, we have sufficient amount of money to repay, so that is why easily we can pass on the entries. Again the same kind of a question, but here we have to prepare a balance sheet. We'll see what kind of a question is this. The summarized balance sheet of Sterling Limited as on December 31, 1997 was as follows. As you can see here, this is redeemable, which is 10 lakh, equity, which is again 10 lakh. We have capital reserve 5 lakh, general reserve 2 lakh, profit and loss 9,50,000. The preference share we are going to redeem, and that too with a premium of 25%. And the company decided to issue extra 50,000 equity share at the rupees of 10 with the premium of 10 each, at premium of 10 each at premium of 4 per share, payable in full of March for the purpose of redeeming the share. Show the necessary ledger accounts. Okay, so this is our fresh issue of shares, which is how much fresh issue of shares? 50,000. Okay, 50,000 into 10. Yeah, share capital is of 5,000 and okay, so premium of 4 rupees per share means 50,000 into 4, 2 lakh is the premium. Okay, this is, after this what we are going to do, we'll never take capital reserve, we'll take only general reserve and profit and loss, we'll transfer it to CRR. Okay, so general reserve 2 lakh and profit and loss account will take 9,50,000, which is 3 lakh. Why? Because overall 7 lakh we have already received the money. How much we need to repay in 10 lakh? Okay, in 10 lakh we have 7 lakh. So how much we are going to repay the money? 3 lakh we are needed to repay the money along with the 25% of premium. So premium is 2,50,000. So here we are going to take 5 lakh from the general reserve and profit and loss account. We are going to take 50,000. Okay, and here first of all we'll take share premium. So this share premium will take, and 50,000 will take from the profit and loss account, and 2,50,000 is already adjusted. Now here also preference share due is that 10 lakh is the real redeemable preference share, 2,50,000 is the premium, overall 12,50,000 is our preference shareholder which we need to pay, that we are going to pay. Okay, this is the final payment entry, 12,50,000. See students, 7 lakh, okay, we have taken from them, from the fresh issue of share. 5 lakh we have taken from the reserves. Okay, overall 11 lakh we have taken. Rest 2,50,000, here 6 lakhs we will take 5 lakh. Okay, 5 lakh plus 5 lakh we have taken from here adjusted, and 2 lakh and 50,000 we have taken from adjusted from the this free reserves. So by this easily we have paid. Now we, based on to this, we have to make the new balance sheet. So we have the new balance sheet, which is fresh issue is 50,000. So old issue is 1 lakh. So overall 15 lakh. Okay. Old issue is 10,000. 1 lakh equity share. Now fresh issue 50,000. Overall 1,50,000 equity share, which is out of 10 rupee, which is 1,50,000, 15 lakh. Capital reserve we have not touched, as it is, will write down. Capital redemption reserve, which is again 5 lakh. Profit and loss account 6 lakh after reducing the 3 lakh. Okay, creditors account as it is, and even the sundry asset as it is. Cash, after paying this all amount, okay, it will get reduced to 50,000. It has been reduced to 50,000. Because you can see the bank entry. Here also you can see the bank entry. So what you need to do, 6 lakh plus 7 lakh, 13 lakh. In that, if we minus this 12,50,000, 50,000 will be the remaining one.